Hi, this is Dan Moralez with First Place Bank. Just wanted to take a quick moment to record a quick video in regards to refinancing your mortgage and what types of things you can do to help make the process a little bit easier and faster for you. Biggest piece of advice I give clients is be prepared. And what I mean by being prepared is know your mortgage balance. If you have home equity loan, know the balance of that as well. What are your current first mortgage balances and second mortgage or home equity loan balances? What kind of interest rates and terms do you have on those loans right now? In regards to monthly payment, does your monthly payment include a property tax escrow? If so, what are your property taxes and what are your homeowner's insurance costs? For us to be able to give you a good, solid set of figures and help you make the best determination as to whether or not refinancing makes sense for you, having that information handy is going to help a ton. Now, a lot of times you'll find that information on a statement, if you get a statement as part of your mortgage, or you can find it by checking your lender's website, or you can also find it by calling your lender a lot of times as well. But being prepared oftentimes will save you a couple of extra phone calls or trips back into the bank. The more information you know about your current mortgage, the quicker and faster we can help you in determining whether or not refinancing will benefit you and if refinancing is even an option for you. So again, be prepared, know as much information about your current mortgage, your current balances, your current terms, what your property taxes are, homeowner's insurance, good stuff like that. That will save you a ton of time and make the process a lot faster for you. One of the other things you can do to really expedite the process in regards to refinancing or really any mortgage is to use our online application. Our online application is available 24 hours a day, 7 days a week. That's at www.danmoralez.com. There's a good chance if you're viewing this video, you're watching it on my website. But again, www.danmoralez.com. That is the fastest and quickest way for us to be able to get information together for you. That gives us all of your pertinent financial information and allows us to get together a very detailed set of figures and a very accurate set of figures for you relatively quickly. Again, the website is probably the quickest way to get the ball rolling for you. Again, www.danmoralez.com. Click on the Apply Online section, and you're able to do the application online. There's no cost or obligation to do the application online, so you're not into us for anything, if you will, until you decide to move forward with the transaction. Okay. One of the other things I like to tell clients is be patient. A good mortgage lender is extremely busy right now. Any mortgage lender is extremely busy right now because there's so many people who are looking to refinance because interest rates are low. That means pretty much every lender is busy, but a good lender that really knows what they're doing is busy not only in times of low interest rates, but in times of, if you will, a traditional or standard market. We have seen a record number of inquiries, pretty much a never-ending stream of phone calls, voicemails, emails. We do our best to make sure we get back to every client as quickly as possible. Please just be patient because the complexity of today's transactions is far greater than what they were even 12 months ago. So it does take a little bit more to get a deal done. It is a little bit slower process, but if you can please understand that we do our best to make sure we service every client as quickly as possible. Speaking of the process being harder, I'd like to remind you that this mortgage process is far more difficult than what it would have been when you did your last loan. Oftentimes clients will say to me, Dan, when we did our last loan, I didn't have as many hoops to jump through. There wasn't as much documentation. I didn't have to sign as many forms. It just seems like the paperwork and the steps necessary today to get a loan done are a big, gigantic hassle compared to what they used to be. Guess what? You're right. It is a lot harder than what it used to be. The process to get a mortgage done now is far more difficult. Not impossible, but far more difficult. The amount of paperwork is far greater. The process and clarity of how transactions are done, in my opinion, it's more difficult to understand than what it used to be. You can thank the government for that. Beginning this past January 1 of 2010, they put into place a new set of rules as far as how closing costs and different parts of the transaction are disclosed to you. That new set of rules made the transaction far less transparent. So at the end of the day, you actually get probably less information than what you did before. I do apologize. I wish this process was far easier. Unfortunately, I've got to play ball with what the government gives me to work with. And in addition to that, I get to work with what Fannie Mae and Freddie Mac give me to work with And unfortunately, oftentimes that process gets tougher and tougher. The box of what it takes to get a loan approved gets smaller and smaller. And at the end of the day, we do our best to make sure that we help you find your way through the box. I like to give clients the analogy. I'm kind of a mouse that's in this gigantic maze. My job is to find the piece of cheese for you and bring it back to you. That maze gets bigger and more complex pretty much every day. So again, please remember, we do our best to get our little piece of cheese for you and bring it back, but it is a much more difficult process than what it used to be. For many clients, that I've worked with numerous times, the frustration can be a little bit greater this time around because of these extra hoops. I truly wish it was different. Unfortunately, I've got to comply with what the government forces me to comply with, and that oftentimes means more paperwork than what we've ever done traditionally. So again, it is a harder process than before. One of the other things I want to talk about as well is appraisals. Oftentimes, in order for us to give you a rock solid set of figures, we have to know what your house is going to appraise for. I've got to be honest, it's going to be difficult for you to know what your value of your house is, just like it is for us. So oftentimes we'll give you a set of figures based on what we think might be a approximate value of what your property is. That set of figures can change pretty significantly depending on what the actual appraisal comes back at. If your appraisal is far less than what you'd hoped for, the numbers could look worse than what they were. In some cases, it may even close or that window of opportunity for a refinance. We try to make sure we've looked at every option up front. We covered every detail. And in some cases, you'll find that I'm very clear in regards to the fact that you could spend $350 for an appraisal only to end up with nothing when it's all said and done, other than an appraisal that tells you your house has gone down in value from what it did last time. We do very carefully try to go through and set the right expectation as far as what the numbers would look like. But I got to tell you, so much hinges on that appraisal. And until it's done, oftentimes we don't know for sure exactly what everything's going to look like. But that is probably one of the biggest risk or X factors or variables that's part of the mortgage transaction. One of the other things I like to talk about as well, real quick, is the lowest interest rate isn't always the best deal. Now, oftentimes people will call me and say, Dan, what's your interest rate? Well, the interest rate that's available to you can vary depending on a number of factors. What is your credit score? What's your equity position in the property? What type of property do you have? Is it a condo? Is it a single-family home? Is it a manufactured home? Is it a single-family house? Is it a two-unit, a 3-unit, a 4-unit? Do you have a home equity loan? If you have a home equity loan, what is the total of mortgages against your property versus what it's worth? The terms that are offered to you can vary significantly depending on what the answer to all of those different questions are. Again, not the same process that you would have seen even 2-3 years ago, where a 30-year fixed rate was kind of the same across the board. Nowadays, an interest rate can fluctuate depending on a number of different factors, on top of the fact that the market can be very volatile. Just this week alone, we've seen a lot of volatility in interest rates where we've seen some movement down, and then we've turned around and lately have seen movement in the opposite direction where we've seen a small move in interest rates moving against us. At the end of the day, rates are still very attractive, great opportunity for folks who haven't had the opportunity to refinance or who are contemplating it. But the lowest interest rate is not always the best deal, because oftentimes that lowest interest rate also comes with the highest closing cost. What you've got to look at in refinancing is, what am I saving? What's the difference between my current mortgage and my new mortgage? What am I saving, and what is it costing me to save that? And how long is it going to take me to make back those costs? If the costs are $2,000-$3,000 to refinance, and I'm saving $20-$30 a month in payment, is it worth refinancing? Probably not. So a lot of times clients will look for the lowest, dirt cheapest interest rate and not even realize that they're actually taking the deal that's worse for them. And one of the options I like to do is I like to show folks, here's a low interest rate where you pay all, if not the majority of your closing cost, and then throw into the mix a couple of other options. Typically one option where we pay all of your closing costs for you. You take a slightly higher interest rate, but we pay all of your closing costs for you. Believe it or not, more often than not, the higher interest rate with no closing cost typically wins out. And when we put that comparison together for you, you'll understand what I'm talking about. Lowest interest rate is not always the best deal. You've got to look at loan structure, you've got to look at what your costs are, and what are you saving when it's all said and done to determine what really is the best deal for me when I've kind of gone through all of the analysis, if you will. The other thing to look at is experience. I've done this for nearly 20 years, and one thing I see time and time again is I get a lot of transactions where a borrower will come back to me and say, gosh, Dan, I wish I would have started with you first, or I wish we would have came to you right away, because they've had a transaction where they've tried to start someplace else, the loan got turned down or denied, and only to get to us through either a referral source or a friend or a family member or somebody that they knew, and we were able to put the deal together. Again, at the end of the day, a seasoned lender is a busy lender, but a busy lender is busy because they're good and they know what they're doing. Now, more than ever, you need somebody who knows what they're doing. Now, oftentimes I tell folks we don't shop for a doctor based on whether the doctor is busy or not. We want a doctor who knows what they're doing, is able to diagnose the challenges that we have, and is able to give us the best diagnosis and the best treatment to be able to solve our problems. Same thing is true with the mortgage lender. You want a lender that knows what they're doing, can structure your loan properly, make sure you got the best deal that's available for you, and one that fits your individual circumstances. No two clients are alike. Everybody's got a unique, different situation. What might be the best solution for one client may not be the best solution for you. Our job is to help you find the solution that's best for you, not necessarily the mortgage option that's best for the bank. At the end of the day, one last bullet point to cover is if you're a client that closed a loan in 2009 and you closed under Fannie Mae's Home Affordable Refinance Program and you took advantage of some of the flexibilities that were allowed under that program. One of the flexibilities that you're given is the ability to refinance up to 125% of your home's current value and not have to deal with mortgage insurance. If you closed in 2009 and used Fannie or Freddie's Home Affordable Refinance Program and use the flexibilities available to you under that program, oftentimes those clients who are coming back looking to refinance a second time because interest rates have gone down further are surprised to find out that they cannot use the HARP program a second time. That means that oftentimes if your home's value had gone down to the point where now your equity position was either non-existent or your current mortgage balance is more than 80% of the appraised value, it means nowadays you'd have to have mortgage insurance because you have to qualify under Fannie Mae's standard program. In other words, you cannot use the Home Affordable Refinance Program a second time unless your loan closed prior to that March 2009 deadline. So I do apologize. I wish I had better news for those clients who have called me recently that had already taken advantage of the HARP program once. Unfortunately, that's something that Fannie Mae kind of closed the door on here within the last 6 months or so. At the end of the day, appreciate you taking the time to watch this video. Hopefully you found the information helpful and useful. Try to put this information together to help you navigate through the troubled waters of the mortgage world so that you're able to get your mortgage done quickly. Grateful for the opportunity to work with many clients. Extremely grateful for the referrals. I get a ton of referrals from clients of their friends and family. We are very appreciative of that and just thank you a ton. Please understand we do our best to get back to folks as quickly as possible. There pretty much is no easy transaction anymore. It seems like everything is a little bit tougher than what it used to be. But at the end of the day, our job is to serve you and to get things done quickly and as fast as possible, while in the process, hopefully not beating up on you too bad. Do appreciate your patience. Do appreciate you taking the time to view this video. If you have any questions or concerns, or you'd like to get the mortgage process started, feel free to apply online or contact our office. Myself, Diana Headings, my assistant, or Cindy Shore, our processing assistant. We're all here to help you. We appreciate the loyalty that we've had from clients over the years and are grateful for your referrals. If there's anything we can do to assist, please don't hesitate to let us know.